Hello and a warm welcome. You've joined us on Markets at Lunch on ET Now. I'm Ashesha Adwaryu. With me is Meryl D'Souza, and turning out to be a soft, lackluster day for Indian equity markets, with Nifty continuing to hover near that 24,150 mark. Barely any action on the market, but several individual stocks are in focus. Let's put the spotlight on some of those. And we have Puravankara. We'll put the spotlight on the real estate sector. The CEO of South, Mr. Mallanna Sasalu, now joins us. Mr. Sasalu, afternoon, Ashesha here, and thank you for taking your time out and joining us here on ET Now. And first up, let's talk about the latest announcement that has come in from the company. You've entered into a JDA for a 7.9-acre land parcel in Southeast Bengaluru. 1,100 crore or 1,100 crore is the gross development value of this project. If you can take us through what the execution timeline could be for this particular one, and how much revenue will be executed in FY27 and then in FY28 and 29.
Thank you very much. Thank you for having me on the show. Yes, indeed, we closed a deal, 7.83 acres of land, and with a development capacity of 0.89 million square feet and 1,100 crore rupees is what's going to be the top line for this project. This is inconsistent with what we are doing all through the year. That is, totally we have done, this is our fifth deal for the year, and we've done around 6,300 crore rupees of developable value. Considering that we are launching around 24,000 crore rupees of total value of the GDV that we want to be launching this year. In FY25, I think we did around 8.5 million square feet of around 13,000 crore rupees is what we did the GDV, the deal closures. And in FY26, we did around 12.76 million square feet, 15,200 crores. So what we are trying to do is, I think similar numbers is what we are looking at this year as well in terms of the deal closures. In terms of the revenues and in terms of the sales and then coming to the revenues, as you know that revenue recognition happens after the completion of the project. So at this point of time, our concentration will be on pre-sales and what was launched some 4 years back, and handing them over is about the revenue. So overall, that we've already given the guidance for the year around 11,200 crores, and we're comfortable with the position that at this point of time how we have gone past, and also this year that the last quarter of the sales were good and the revenues were good as well. So all in all, that I think we're in for a good run this year, I guess.
Okay, got that, Mr. Sasalu. Hi, Meryl here, also joining in. I want to understand on the Southeast Bengaluru deal, this is set to follow a capital light joint development model. Can you throw some light on what that structure actually means for your balance sheet? How much capital do you deploy versus the landowner or the partner? And also, how does the profit share work in the JDA?
This JDA is a 35% revenue share. JDA is what we have, and we have given some advances to the landlord. So this is again our portfolio consists of where we acquire the lands and then we go into a joint development agreement. And this year that ratio has been quite balanced. For example, in Mandur, there's 14 acres where 8 acres, we purchased 8 acres and we entered into a joint development agreement for 6 acres. And in Dodagubbi, again, we did a revenue sharing. I know that's around, the top line is around 1,100 crore rupees, and we did a 32% revenue sharing there. And then Sanna Manikere, that's the outright purchase that what we did, and so it's around 800 crore rupees of the total developable value. So all in all, it's it's not that we exactly plan that this much should be JD, this much should be outright purchase. It depends on the opportunity. It depends on what is the capital that we're going to deploy and what kind of returns that we can expect for the risk that we take when we deploy the capital. So that would be the most important aspect when we are deciding whether to go for a JD or a purchase.
So that's as far as the latest transaction is concerned. But Mr. Sasalu, other than this, what is the pipeline looking like, especially in the Bengaluru market?
So in total, we have around, as a group, including South and the West, everything included. Now we have reached a portfolio size of 59,000 crore rupees. When I say portfolio size, that means project which are launched and yet to be sold, and project which are already committed, everything has been paid and in various stages of approval, and whatever the projects that we closed this year, which are under design. So if you put them all together, it's a top line of around 58,000 crore rupees. And out of that, this year, we are planning to launch around 24,000 crore rupees across the country. 75% of that comes from Bangalore, as you asked that question. So that replenishment of that launches, that is the reason why this kind of business development that we have to do so that it's always we have a balanced portfolio.
Okay, got that. And I'm seeing your pre-sales this quarter were at about 14,039 crore against the full year guidance that you've given of around 11,200. I want to understand if you're still confident about reaching this 11,200 guidance for the rest of the year FY27, and what sort of pace do you envision in terms of pre-sales for the rest of the year?
Usually the first quarter will be the slower because we would have really squeezed the market in the fourth quarter. And unfortunately, two of our launches did not happen in the first quarter as planned. Otherwise, we should have been somewhere around 1,800 crore rupees of pre-sales, which did not happen. It's not a value lost; it is a value postponed. So now, because of whatever the changes that were happening, particularly in Bangalore, in terms of the leadership change in the government, and also the session is going on, and so officials are being busy. And also a little bit of that upgradation in software in various departments had a little bit of effect on our launches. And I think the things are now well settled as we see that in the next 3 quarters that, whatever the launches that we have planned, and we should be able to go through that. And we are fairly confident, or I should say we are very confident of reaching our numbers of that 11,200 crores guidance that we've given.
Okay, and I believe, Mr. Sasalu, you also have aggressive debt reduction plans. If you can take us through what is the debt level currently, what is the target for debt reduction for the balance of this year, and now that you've acquired this land, are you looking to acquire such land parcels going forward as well?
See, our net debt stands at 2,836 crores, and our March last year debt stood at around 2,321 crores, and we've increased the debt by 500 crores. We're very comfortable with the debt position because this entire debt, as I always say, that either you are trying to fix the operational deficit by taking the debt, or you are in stressed situation, other you will take the debt. The third situation is for the growth. So our debt in the last 3 years has always been for the growth. So as we roll out the projects, and the debt has to come down, and we will always take it to consider. Debt is an important factor of running the business. And when we roll out the projects, and when the surplus cash flows are there, that along with the debt is deployed for the growth, because growth is inevitable. We have to be growing as a company. So reduction of debt, we have one of the projects that, the Zentech, which is a commercial project, which we have sold, and it's almost that is going to come to the conclusion at this point of time because of the nature of that deal itself, that some 300 crore rupees of debt reduction will happen because of that. So we have taken measure to reduce the debt, but is it something that we want to be very aggressively reducing the debt? We want to be aggressively growing so that debt looks smaller in front of when it's compared to the capability of the organization to deliver and the portfolio size that we will have.
Okay, that's the outlook on debt coming in. But Mr. Sasalu, thank you so much for taking out the time to speak with us on ET Now today. Thank you so much.
Thank you very much.